One. Good afternoon, everybody. We're here for segment 2 with Mike Zuber from One Rental at a Time. Mike, how's it going?
Going good, man. Every day Saturday, the Warriors just won their, or Steph, Clay, and Dre just won their 4th ring. Andre, shouldn't forget him. Steve Kerr just got his 9th. So today's a good day in Warrior land.
It's pretty awesome. It's pretty awesome. Yeah. I would say he had probably slightly more to do with the last 4 than the first 5.
Yeah, he did happen to have Michael Jordan for 3.
Yeah, in case
Tim
you
Duncan for 2.
Yeah, I was actually equipment manager on that team. You probably didn't see me because I didn't have the beard back then, but I had as many rings as Kerr from that same period. Yeah. Would you like some water, Michael?
Yeah,
but anyway, long story short is, but yeah, congratulations to the Warriors. So what we wanted to talk about in this video was recently in the Facebook groups, there was a debate of net worth versus cash flow. Mm-hmm. And that a number of people were citing net worth as being more important than cash flow.
Wow.
And so what I wanted to talk about was your belief, but also they kind of framed it a little bit in the guise of, because they do a lot of seller-based financing, that people that are evaluating them believe that net worth was more important. So I wanted to just kind of hear your opinion on that, because obviously you study, the consumer. You yourself are built much the same way. So wanted to understand kind of what your thoughts on that are, because I know that you and I both have to fill out those awesome PFSs every year.
Yeah. So just more color, right? So my first job out of school was an accountant, right? A general ledger accountant for a publicly traded company. I have an econ degree. I have a master's in business administration. I can tell you that a lot of financial this and that push either net worth, and that's called the balance sheet in accounting speak, or they push the income statement, which is, how much I make, right? Side hustle income. However, as an actual accountant, somebody who audits books, I can tell you that neither of those statements mean a hill of beans. It is all about a third statement that almost nobody talks about, and that is the cash flow statement. You can have you could be worth 8-figure. You can have an 8-figure net worth. You can have a 7-figure income, and you could find yourself in bankruptcy court. Cash flow is the only thing that matters. Cash flow is blood or oxygen or whatever you want to call it for the human body. You can survive for a couple of minutes, but ultimately you're dead. Again, I want to tell you, you could have I've known people who have 8 figures net worth, and they've gone bankrupt in as short as 8 to 9 months, all because of cash flow. So anybody who talks about net worth being the most important is either naive, misinformed, or, and this is probably they haven't yet experienced a downturn. Net worth is full of opinions.
Yes. Assumptions and opinions. Yes.
It doesn't freaking matter.
Yeah.
You bought this piece of art or this car or this house. You think it's worth X. Well, have you ever tried to sell it in a down market?
Right.
Where there are no buyers?
Right.
You bought a Bored Ape for $300,000, a freaking picture on your phone. Try to sell that thing in a down market. It's worth like 3 pennies.
It's mark to market, right? That's the accounting.
Yeah,
mark to market.
Concept,
mark to market.
And again, it may eventually someday be worth 300 grand again, but not today, not in a down market, not when everybody is selling. Again, anybody who says network is important is one of those 3 things: misinformed, naive, or has yet to experience a nasty bear market where true assets are sold at stupid numbers.
Yes.
And it's going to happen again. So cash flow is most important. Net worth is, if we're going to use letters, right? Net cash flow is like A. It's the most important, and frankly, the only thing I worry about. Net worth is probably not a Z, but it's probably somewhere in the middle, M-N-O, something like that.
So I'll give you an honorary New England thing. My boy's wicked smart.
Wicked smart.
It's wicked smart. So yeah, this is what I look at. And so this is one of the things, again, to consider is when you're looking at, and some people will make the claim that, well, it's because we do a lot of seller-based financing is why. All I would say is put yourself in the other person's shoes. You become the seller-based financing. and you find out what you'd rather see. I don't want to see somebody's balance sheet that says they're worth $10 million, but that $10 million is based all on assets, because that's largely what your PFS is built from. Your personal financial statement is largely your assets.
Yeah.
Very little of it is cash reserves or cash that you have sitting there. It's much more based on assets. And largely speaking, especially for real estate investors, it's the spread. And the spread is, I owe 200, appraisal said it's worth 270, but now in a down market, you're chasing a falling knife. It's really maybe worth 220, but guess what the appraiser does? He has to be, or she has to be, more conservative. And so they market to below market because they're like, we're downward trending. Yeah. So now I'm going to base it. Now I think it's worth way in 80. Now you have a $20,000 liability. By net worth, you no longer have any.
Yeah. So I have borrowed millions of dollars, both privately and from sellers. They've sold me their assets on terms. And yeah, sure, some of them are enamored by what a bank calls a personal financial statement. But the ones that are sophisticated, they want to be guaranteed they're getting paid back.
That's right.
They're not looking at this going, ooh, if I foreclose on you, I get my house back and maybe I can foreclose on that other asset. They're not asking for cross collateralization or all these. They want to be paid back.
That's right.
So again, cash flow is the only thing that matters in this game. Net worth is fictitious. It's made up. You have never experienced a down market. You want to flex and say you're worth 10. Like there are people out there that call themselves millionaires, and I guess they are technically, but they can't afford to go out for a sushi dinner on spur of the moment, right? Your cash flow that tight. Yeah. I feel for it.
Well, so one of the other things that I like to think about here is that if you look at DSCR loans, right? Non-QM, that is an industry that's solely based on what the asset is generating, right? And so if you look at what the asset's generating, do they care about what your net worth is?
No, I've done millions of dollars in non-QM, and they've never asked for a personal financial statement.
They don't care. It's because they only care about the asset and its cash flow.
And your ability to pay, hence they do look at your credit score.
Correct. They want to know that you're going to be able to pay back. So any other thoughts that you had kind of on, I mean, I agree with you. I think that net worth in like general speak is, you can't have zero net worth and have massive cash flows, because that just shows that you're a bad business person.
Sure.
However, net worth is way down the list. Like I want to see a lot more. Like I want to see, yes, reserves, but I want to see the other things too. I want to see massive cash flows, and I want to see massive margins, right? That's what I'm looking for.
Yeah. Again, I want to just tell you, if you want to understand the importance of cash flow, hold your breath, and as long as you can, and tell me how that ends up. The cash flow is oxygen or blood for a human body, for a business, right? So net worth is nothing. I mean, I don't even know what a net worth would be on a body. I have no idea. It's just not important, right? What's a vestigial organ, like the appendix? Sure. That might be net worth. Yeah, we can take it out, take it or leave it. If it's in there and it's working, yeah, leave it there. But
a gallbladder,
a gallbladder, yeah, these kinds of things, yeah, that's net worth to me. It's all. And again, I got this from accounting, right? I have audited business who had 9-figure net worths, but their cash flow was all wacky, and their invoice collection, credit collection was bad, and they went out. They were done.
Yeah. Yep.
It's cash flow only for me.
I completely agree. And this from the words of the Lumberjack Landlord's resident accountant, Mike Zuber from One Rental at a Time. Mike, where can everybody find you, my friend?
One Rental at a Time is a growing YouTube channel. Please like, subscribe, come join. I go live 8 a.m. Saturdays for 60 minutes of questions. If you want your question answered, you need to ask early. We've been lucky enough to get hundreds of people on. There was a time I could answer them all. That time is long past. So get on early, ask early, and let's have some fun.
You're at like 280 last week, I think, is where you peaked.
I think so, yeah.
That was awesome. Fun. So as I always say, we like to create great content for you. Hit the like button, certainly subscribe, check us out. We are the most accurate when it comes to real estate and investing, because we're doing it daily.
Every day.
Every single day, not just graphs. We're actually the ones putting the data into the graphs.
Well, we're putting real money to work. Just
real money to work on a daily basis. So Mike, thanks so much for the time. Lumberjack Landlord, like and subscribe, and Mike, we'll see you in segment number 3.